Hi everyone, we're ANIHAN and we'll be talking about the Business Valuation Liquidation Report versus the Enterprise Acceleration Plan. Vision, mission, goals, and objectives. For both liquidation and acceleration, we have the same vision, mission, goals, and objectives. Our vision is to promote vegetarianism and veganism, encourage customers to enjoy plant-based food, and develop a consciousness towards environmentally friendly practices. For the goals and objectives, both acceleration and liquidation have the same goal of providing healthy options or alternatives to customers to offer high quality food and a wonderful experience at a reasonable price and to help the environment. For our organizational goals, we really want to emphasize the increased profitability of our company, the expansion of our revenue streams, and to really target in the customers that we want. So ANIHAN is operating under the food manufacturing industry. What we've been doing for the past 2 years, we've been selling vegan and vegetarian burgers. And for the acceleration plan, we plan to still continue what we've been doing. We've been operating in Lapu-Lapu and Cebu City for the past 2 years. And for the next 5 years in our acceleration plan, we would like to expand to other cities in the north and south of Cebu. For ANIHAN's demographic, we'll be using vegetables and fruits as our main ingredients. These are all safe and beneficial for people of all ages due to the vitamins and nutrients that come with it. For the customer's occupation, the students, employed, and self-employed population are included. For the past 2 years, we've been doing the cost-plus pricing strategy. And for our acceleration plan for the next 5 years, we plan on doing the same type of pricing strategy. And maybe further on, we'll be adding more strategies such as the psychological pricing. Here's an example of the cost-plus pricing strategy that we've been using for our product. So we have the direct cost, which is per unit, and the indirect costs per unit as well. We add them together, and then we add the markup. We chose different percentages of markups on our different products. So that would give us the total. During our operations, we've been doing advertisements, flyers and posters, and social media marketing and campaigns. For our acceleration plan in the next 5 years, we plan on doing the same things, but we want to add more strategies and programs such as loyalty programs, discounts and promos, and joining food bazaars and events to further market our product and to further expand our target market. Here is our sales forecast for 2024 to 2028. This is the 5-year sales forecast for the Enterprise Acceleration Plan. So as you can see in the graph, there is a steady increase of total sales in the next 5 years. From 630,000 pesos, this would increase to 780,000 pesos in the next 5 years. This is the supply chain management of ANIHAN. We've been following the supplier, producer, and customer flow. So we, ANIHAN, we are the supplier and at the same time the producer. We produce the products which are the vegan and vegetarian burgers and french fries, and we will directly deliver them to the customers. We will do this in our acceleration plan as well. For the Business Valuation Liquidation Report, this is the production forecast for the first 2 months of this year, 2023. And for the acceleration plan, we have summarized the years 2024 to 2028 in this production forecast. So for the production capacity, it's pretty much the same for both. For the liquidation report, we have 2 shifts per day and 4 hours per day. But for the acceleration plan, it still is 2 shifts per day, but hours per day increase to 8. So that would double the hours per day in the next 5 years acceleration plan. For our machineries and equipment, we've been using the refrigerator, electric griller, blender, gas stove, deep fryer, air fryer, and stall. And for the acceleration plan, we plan on getting a new refrigerator, electric griller, blender, gas stove, and deep fryer. Also, we have added furnitures and fixtures. These include tables, chairs, our kiosk, etc. So for the costing of each product, we have the vegetarian oyster mushroom burger. So we've been using this method, this costing, which amounts to 78.83 pesos. And in the exploration plan, we will not change it. The same thing with our vegan fried oyster mushroom burger. The cost per mushroom burger is 62.81. And lastly, for the potato fries, we have the cost per serving 53.27. So all of our three products would still continue in our exploration plan with the same cost. So since our costing isn't going to change, our standardized recipe isn't going to change either. So for our three products, it will all stay the same. This is the recipe for our vegetarian oyster mushroom burger. This is the recipe we use for our vegan fried oyster mushroom burger. Lastly, this is our recipe for our potato fries. For the actual selling, we're following the same requirements with regards to the shelf life, storage, and quality. There are only minor changes with the storage of our mushrooms as suggested by our supplier. So we have a list of things that we place in our packaging. These include consume within 2 hours and keep refrigerated if not consumed. And for specifically the vegetarian oyster mushroom burger, we have separate reheat instructions for the two different burgers. So this is an example of our packaging, and for our customers, if they order via Maxim or Lalamove or use those services to have their products delivered, then we make sure to properly seal our packaging. We've been doing this since the pandemic, and we think it's of good quality. The system is good, and we want to continue it in the acceleration plan. So for the internal supply chain, we've been using the same supply chain that we revised a few semesters ago, and we think it's pretty good, and it makes sure that the product is intact and it's of good quality, and it makes sure that the customer's preferences are met. This specific supply chain also ensures effectivity and efficiency in our team. So on the left, we have the layout design for the liquidation report. The layout has allowed the enterprise to have an efficient production process because all of the needed cooking equipment and storage areas are easily accessible. The kitchen area is where the products are prepared and cooked, while the stall is used to receive orders, assemble, and pack the products. And on the right for the acceleration plan is our future plan for the layout. So in this layout, the open kitchen area will allow the people to see the cooking station, food prep station, washing station, and of course the counter where the customers will pay for their food. The room at the back will be utilized for storage and other purposes needed for the business's operations. As mentioned previously, we will be making use of the same machinery and equipment. These are the refrigerator, electric griller, gas stove, blender, and the air fryer and deep fryer. Manpower skills requirement, specifically for the administrative area. There are five main positions, which is the general manager, operational manager, marketing manager, human resource manager, and finance manager. We are five in our group, and each one of us have a designated role. And we will be continuing on our roles in the acceleration plan. Direct labor. In our operations, we've been having two cooks, one assistant cook, and one cashier. And in the acceleration plan, we plan to increase the number of assistant cooks to two. So in the acceleration plan, there would be two cooks, two assistant cooks, and one cashier.
For the administrative costs, the rate per hour is 24 pesos. For direct labor costs, the rate per hour is 53.13 pesos. Next is pipeline inventory. For the business enterprise, there is no pipeline inventory as we are the manufacturers and the seller at the same time. At our physical location, we produce and sell our products to our walk in customers or online customers. Our products are made to order, thus, they are immediately served to the customers after production. Next is finished goods. There is also no finished good inventory for ANIHAN because the enterprise makes its products when the customer pays for them. Our products, which are vegan and vegetarian food products, are only made to order to ensure the freshness and quality. Next, we have waste management. For non biodegradable waste, the enterprise produces plastic waste. For biodegradable waste, the enterprise produces paper and organic waste. Since the group mainly generates organic waste, the group has created a logbook to input all the waste garnered at the end of each production day. The positive effects of doing such includes improved inventory control, reduced food waste, and many more. For the distribution system, the enterprise will continue to operate through its physical store and serve both walk-in customers and online customers. For the walk-in customers, the enterprise is able to serve or give the products to the customers immediately in the physical store. For online customers, the enterprise continues to avail services from third-party applications that provide delivery services. For the liquidation report, ANIHAN is located at Chain Air Aviation. Our orders come from our walk-in customers and online customers residing in Lapu-Lapu City. For the acceleration plan, our plan is to have our physical store located in INJ Building, Mandaue City, a more commercial location where we can take orders from Cebu City and Mandaue City customers. As mentioned earlier, there is no inventory of finished goods as the products are made to order and are immediately served or delivered to the customers. However, for the raw materials, these are all stored inside the enterprise's location. These are all stored in the fridge and in the shelves, pantry, or storage areas. We have here the pictures of our production area, pictures of our equipment, and pictures of the furniture available in the site. For the type of ownership, ANIHAN is operating as a sole proprietorship under the name of its general manager, Clyde Howe, in compliance with our course. A memorandum of agreement has been executed stipulating the agreements of the sharing of investments, liabilities, and profit. Here we have our organizational structure, which consists of the general manager, marketing manager, HR manager, operations manager, and finance manager. Under the operations manager, we have the cook and assistant cook. Under the finance manager, we have the cashier. For admin costs, the members have agreed to adopt the present monthly minimum wage of 5,500 pesos. Thus, monthly administrative salary divided by 29 days divided by 8 hours work gives us a rate of 24 pesos per hour. We are adopting the monthly minimum wage of 5,500 pesos based on the labor law. For direct labor costs, the members have agreed to adopt the present minimum wage of 425 pesos. Thus, the rate per day divided by 8 hours work gives us a rate of 53.13 pesos per hour. We are adopting the minimum wage of 425 pesos for non-agriculture with less than 10 workers based on the labor law. The links provided below are the references used for SSS, PhilHealth, and Pag-ibig. Since the number of working hours for each employee per month are erratic, we provide a separate computation for each month. Here is a sample table of our admin costs. Next, we have here a sample table of our direct labor costs. Lastly, we have here a sample table of the salaries along with the benefits cost. The enterprise's initial capital was 70,000 pesos. The sources for both long-term and short-term financing came from our personal savings and family. However, if the enterprise would accelerate, the startup accelerators can also provide funding for the enterprise. The enterprise would choose a startup accelerator in the Philippines and apply for an accelerator program. On the left, we have our income statement period ended February. Total sales was around 97,000. Total operating expenses was 29,000 and net income was 22,428.60. On the right, we have a 5-year projection from 2024 to 2028. There is an increase in net income from the 110,000 net income in the first year to the 170,000 net income in the fifth year. On the left, we have our cash flow period ended February. Our total cash flow comes from our operating activities, which amounted to 22,428.60. On the right, we have a 5-year projection from 2024 to 2028. There is an increase in cash flow from 110,000 in the first year to 170,000 in the fifth year. Current bank balance as of February is 187,463.37. Projected bank balance as of December 31, 2028 is 873,096.8. On the left, we have our balance sheet period ended February, where cash is 187,463.37. Inventory is 1,173. Fixed assets net depreciation is 17,095.82. The total assets amounted to 205,732.19. Liabilities are zero and equity is 205,732.19. Thus, the total liabilities and equity amount to 205,732.19. On the right, we have a 5-year projection balance sheet from 2024 to 2028. There is an increase from 174,000 in the first year to 234,000 in the fifth year. For our business valuation, we have chosen the asset approach net asset value. As discussed during class, net asset value is equal to a company's total assets less its liabilities. In the previous slide, it was shown that our total assets are 205,732.19 and our liabilities are zero. Therefore, total assets less total liabilities results in a value of 205,732.19. For our decision, ANIHAN would like to liquidate and sell off the business at the end of the semester. The enterprise believes that the operations of the business for the past 2 years have been a success throughout the online and offline setting. Despite this, ANIHAN thinks best that parting ways with the business is the most appropriate decision, taking into account each member's plans after graduation.